What is funding round? Funding rounds are capital raising rounds of businesses for the purpose of building, developing, and expanding their products. In the crypto market, funding round plays an important role for each project as each development stage almost has at least one investment round. Normally, funding round is divided into many rounds with names including pre-seed, seed, Series A, and each round has many different investors such as investment funds, VC, angel investors, incubator, funding rounds of a project in crypto. In the crypto market, the capital raising rounds of a Web3 project are similar to traditional markets when including rounds including pre-seed, seed, Series A, Series B. At the same time, with each round of capital calling, the project's phase will be more clearly defined. For example, if a project calls for Series B capital, it means the project is in the stage of wanting to expand its market. Pre-seed round. Pre-seed funding is the first round of funding in a startup's journey. Previously, pre-seed round was simply a term referring to a project that used its own capital to maintain the business. However, at present, pre-seed funding is a capital raising round with the appearance of many different investment funds, including incubators and startup accelerators such as GBV Capital, Expert Dojo, Y Combinator. Normally, if a project wants to reach the pre-seed round, they must prove the feasibility of their idea through completing MVP, minimum viable product. Then present the product at incubation programs such as Binance Incubation Program. In addition, pre-seeding funding can raise capital up to more than $2 million USD, but because of the number of startups that want pre-seed capital but ignore MVP, this leads to a situation where not many projects actually raise capital successfully. Pre-seed cycle. If a startup project is successful in the pre-seed round, their next round of funding is usually in the seed or Series A round. Seed round. Seed round is the first capital round of a startup. Although it sounds similar to pre-seed round, seed round is a capital round with the purpose of perfecting the product and starting to bring it to market. Meanwhile, the pre-seed round is simply a test version and investment funds rely on it to evaluate. Therefore, according to SVSG, many startup projects confuse the purpose between seed round and pre-seed round, leading to a situation where they waste time and capital raising money just to develop the product. If a startup successfully raises capital in the pre-seed round, the amount of capital raised in the next seed round can double. Series A. When a business has a complete customer file and data after the seed round, these businesses often aim for the next capital round, Series A, with the purpose of expanding the business and having capital to operate their strategies. Translate later. Series A often appears from many investment funds instead of incubators or angel investors such as seed or pre-seed rounds. It is often easier for businesses to raise capital in the Series A round than in the first round such as seed or pre-seed when they have to prove their suitability in the market. According to Crunchbase, projects that call for capital in the seed round usually have a 30% chance of raising capital in the Series A round, and profits from this round will also ensure profits for investors. In addition, in some cases, startup projects skip the seed round to go to the Series A round because they already have the product, customer file, and complete data to participate in Series A instead of seed. Typically, a Series A capital round often raises more than a seed, along with a higher valuation. Strategic round. In capital calls such as seed, Series A, participating investment funds often have the purpose of making a profit. But strategic rounds are investment rounds in which the fund supports capital and vision for the project. The purpose of strategic round is support for investment funds. For example, they are allowed to test startup technology. Therefore, strategic rounds are often investment rounds where the fund and project cooperate long-term. A typical example of strategic round is Burnt, Xion, a project that received strategic investment from Circle, the business behind USDC. Immediately after that, Burnt Xion switched to making a Layer 1 blockchain with USDC as the transaction fee token. In addition, users can easily realize that strategic round is not suitable for many startups because the amount of capital provided from investors is quite small and the long-term vision may not be enough for the project. Therefore, in many cases, strategic investors buy startups and own the project's technology. An example can be mentioned is the Ramper project when 98 made a strategic investment in Ramper.